Be Wealthy and Smart, episode 850.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the tech stock rebound that happened yesterday that got a lot of people caught by surprise, and it was a nice surprise, up almost 4% for tech stocks. But people were asking, what caused that? Why was it this huge move? What kinds of things were going on? Well, a lot of things are now driven by algorithms. So a lot of the actual buying with the stock market is done by computer. And when things hit a certain level or certain ratios happen or certain relationships happen, that's when the buy programs come in. Lots of stocks can get very oversold. They can also hit certain chart patterns, and that will trigger the algorithms. Also, the dollar, what the dollar is doing, whether the dollar goes up or down, whether interest rates go up or down, what is happening in the bond market with liquidity. There's lots of different measurements that are going on with these algorithms, but nonetheless, things can get very oversold and the buy programs will come back in. Also, we can have the shorts that start to win in one direction and then things start to go the other direction, causing the shorts, which are trying to drive prices down and hoping that prices go down so they make money. When that reverses and they start losing money as stocks go up, it can cause the shorts to panic and cover their trades. That means they have to go back into the market and buy shares of whatever they have shorted or sold, trying to cover their shorts and thereby close the position out and stop their unlimited losses that happen when the stock goes up. So once you have the stock market move a lot in one direction, when it starts to reverse, the shorts will come in and cover, and you can have a really sharp move like this 4% move that we had yesterday. So this article comes to us from Reuters. It says, NASDAQ surges as tech stocks roar back. U.S. stocks rallied on Tuesday with the NASDAQ gaining about 4% to recoup heavy losses from the previous session as U.S. bond yields retreated and investors scooped up battered technology stocks. Tesla jumped the most in almost a year, while Amazon and Microsoft posted the largest single-day gains in 5 weeks. The tech stars suffered sharp losses in recent weeks as rising yields raised concerns over their high valuations. The NASDAQ posted its biggest single-day rise since November 4th. The Dow set a record intraday high, but pulled back from earlier gains at the close. News that a $1.9 trillion coronavirus relief package was nearing final approval sparked a spike in yields on Monday, pushing the tech-heavy NASDAQ to end more than 10% below its February 12th closing high, confirming a correction for the index. U.S. 10-year Treasury note yields eased to as low as 1.5% after hovering near 13-month highs of 1.6% on Monday. Longer-dated yields have jumped over the last month as investors price in a faster rebound and higher inflation than expected at the start of the year. The market is adjusting to the new level in interest rates, said Christina Hooper, Chief Global Market Strategist at Invesco in New York. Companies whose products and services are in demand when the economy is doing well, known as cyclicals, and small-cap stocks will outperform this year, she said. Tech will end the year higher but not be the leader as it was in the past year's rally. Today, the 10-year is down a bit, and that takes pressure off of valuations, so tech is performing well, Hooper said. The market is just about getting comfortable at this level of rates. Rising rates disproportionately hurt high-growth tech stocks because they are valued on earnings expected years into the future rather than profits earned in the short term. Potential headwind for the market is when interest rates rise further from this point over the short period, since they have risen too fast in too little time, said Michael Sheldon, Chief Investment Officer at RDM Financial in Westport, Connecticut. The rise in Treasury yields has accelerated a rotation from stay-at-home winners to stocks primed to benefit from the economy's reopening, setting the blue chip Dow on pace to end at a record high on Tuesday. While the Russell 2000 Growth Index jumped 3.3% on Tuesday, compared to a 0.1% rise in Russell 2000 Value Index, it has sharply underperformed its value counterpart since the start of the month. Shares of Tesla rebounded 19.6% from a deep sell-off that pushed their shares down 37% from its peak in January to Monday. It was the largest percentage gainer on both the S&P 500 and the NASDAQ 100. The global economic outlook has brightened as vaccine rollouts gain speed and the United States launches a massive new stimulus package, the Organization for Economic Cooperation and Development said, hiking its 2021 growth forecasts. The Democrat-controlled U.S. House of Representatives will take up the relief bill on Wednesday, with the chamber's expected approval leading to President Joe Biden signing the legislation into law later this week. The bank index fell 1.7% after vaulting to a new 14-year peak. Economy-linked financials, materials, and industrials hovered near record highs. GameStop also rallied 26.9%, building on Monday's gain of over 40% on the video retailer's e-commerce strategy and speculation that small investors will pour stimulus checks into markets. Advancing issues outnumbered declining ones on the New York Stock Exchange by a 1.78 to 1 ratio. On NASDAQ, a 2.83 to 1 ratio favored advancers. The S&P 500 posted 37 new 52-week highs with no new lows, and NASDAQ Composite recorded 240 new highs and 17 new lows. End of article. This article attributes it mainly to interest rate movements, but also currency movements, yields, bonds, the stimulus package, liquidity. I think it's all tied up in this particular picture. I do still think we have not seen the end of this correction. I'm still saying we have about another month to go before this is behind us. So just because we had one really strong day, don't get caught off guard thinking that we're just off to the races again. I do think that we hit some resistance points and we will see some stocks move lower in the next couple of weeks. So it's always a good reminder to keep a long-term perspective. Don't let these short-term jostle points shake you out of the market, because these kinds of corrections and the scariness of that is the reason why you can get better than 10% average annual returns in the stock market in the long term, because you have to deal with the uncertainty, the risk, the scariness, the volatility. That's all part of it. If it were guaranteed, you'd be getting 0.5% at the bank. So, as investors, we keep that long-term perspective. If we have extra cash, we can take advantage of buying the dips when the market does move to the downside, so that on the rebound, we can do even better. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. And don't forget, my whole entire podcast library is only available on my website at lindapjones.com/podcasts. Apple Podcasts just has the most recent 300 podcasts, but there's many more podcasts that have a variety of topics over on my website. So check it out at lindapjones.com. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.